Hello, grade 12 mindsetters. Welcome to your accounting lesson with Looney and Ashraf.
Hi, and how are you?
I'm good, Ashraf. How are you?
Good, thank you. Haven't seen you in a while.
Yes, it's been ages.
Yes, long
Yo,
since we've done a show
do you
together.
think that is the last live show for Learn Extra?
I'm telling you.
This year. So what are we doing for the mindsetters today?
Today we're looking at cash flow statements.
All right, mindsetters, I hope you guys are excited. Like I always tell you, I never liked accounting. I didn't do it until matric. So I'll be learning with you guys as well. Remember that we're prepping you guys for your final exams. It may be the last live show for Learn Extra, but we do have exam school coming up next week. So make sure you check that out. I posted all the information you need to know about exam school on our Facebook page. So make sure you visit www.facebook.com/Learn Extra with all the exam school information. And remember that we have a mixture of live and pre-recorded, and we do have accounting lessons in store for you guys as well to prep you guys for those final exams. You can hit us up on Twitter at Learn Extra, and then you can visit learn.mindset.co.za for all the videos, the Learn Extra schedules, and all the notes that you guys need for exam school as well. So I won't waste any more time. I'll take it straight back to Ashraf.
Thank you very much. Okay, guys, remember you have a couple of seconds left before the accounting exam, eh? I'm sure you're counting the seconds already. So let's get right into it. What are we looking at today? Today we're looking at the cash flow statements. But let's start off and say our challenge question for today is, where in the cash flow statement, that means where in the cash flow statement, which specific component of the cash flow statement would you find the buyback of shares? Think about it. It appears somewhere in my cash flow statement. Where in my cash flow statement am I going to find the buyback of shares? Right, that's your challenge question. In terms of what we are doing, let's look at the summary of the cash flow. Number one, when you look at the cash effects of operations, remember, you got to start with your note number one. And your note number one is your net profit before taxation, right? Where do you find your net profit before taxation? Obviously in your income statement. And if it is not in your income statement, then you look at an alternate source of information. Sometimes it may be necessary to redraft your appropriation account. So keep that in mind. Sometimes it may require you to do a calculation to determine your net profit before taxation. Right, what do we do with that figure? We now add back depreciation. Why do we add back depreciation? Because it is a non-cash item. It's an item that does not affect the flow of funds. No money is leaving our business. Therefore, add back depreciation. Number two, you add back your interest expense. Now, why do you do that? Because the question you should be asking is that surely interest expense means money is leaving the business. You're absolutely right. But interest expense is not an operating expense, rather a financing expense. And that is why we add it back in note number one to subtract it at a later stage on the face of the cash flow statements. Right, you then move on. And by moving on, we go to our changes in working capital, right? Now here, you're looking at three items. One, you're looking at inventory, okay? Two, you're looking at trade and other receivables, and you're looking at trade and other payables. And I'm sure you've seen our previous lessons on the cash flow, and you remember the two very important acronyms we discussed. Do you recall them? What were they? One was German, Ayulich. Remember we said we're going to call it German? And the other we said we're going to call it French because it was Edgledu. Now, what is this all about? Watch this very carefully. When an asset increases in value, we are utilizing cash. And the U formation tells you that that answer has to be in a bracket. Please, important for the exams, the moment you deal with an outflow of cash, that figure needs to appear in a bracket. Notice the U formation tells you that that answer has to be in a bracket. When liabilities increase in value, we are generating cash. That's right. So keep this one in mind and apply it when you're looking at inventories, trade and other receivables, trade and other payables. The second one, which we called French, we said et gledu. What does this mean? When an asset decreases in value, we are generating cash. That means the moolah is flying in, coming into the business, increasing my bank account. Always ask yourself this question: what impact is this having on my cash? So, when my liabilities decrease in value, why did they decrease? Because we paid the liability. And therefore, it tells you that you have utilized the cash to pay your liabilities. Once again, that answer must be in a bracket. So please, accounting boffins out there, make sure that when you are working with your cash flow statement, that you apply these two acronyms that we have discussed at length. Okay. Going back to financing activities. What are we looking at? Under financing activities, we are looking at how the business has been financed. Okay? What are we looking at? We are looking at the proceeds of my shares that I've sold. Okay? I'm also looking at, what else can I look at there? I can look at my buyback of shares. Okay, I can also look at loans that were received or that have been repaid. All of those would feature under my financing activities. Okay, now we come to the investing activities. What are we looking at? We are looking at our fixed assets, the purchase of tangible assets. We are also looking at what else? We are looking at the proceeds of my disposal. That means when an asset was sold, what was it sold for? And remember the golden rule. When dealing with an asset disposal, in the cash flow statement, under my investing activities, we will always dispose of the asset at carrying value. In other words, there's no profit or loss on sale of asset. Now wait a minute. Understand this very carefully. The no profit or loss on sale of asset is restricted to the cash flow statement. Nowhere else, anywhere else in the curriculum. If a question appears on asset disposal, then remember, there you would be subjected to, or it's possible that you would sell the asset for more than its book value or less than its book value. So clearly understand this. The restriction on the disposal at carrying value is limited to the cash flow statement. I hope you clearly understand that. Right. Also, under investing activities, we look at our financial asset. That's right, we're looking at the investment. What has happened to the investment? Did it increase? Did it decrease? That also has an impact on my cash flow statement. I hope you clearly understand what we have discussed under these three activities. Okay, now, your financial indicators. Grade 12s, there is no shortcut when it comes to your financial indicators. What you have to do is you have to learn your financial indicators. And if you've been watching us during the year, one of the suggestions that we made was that you'd write them out on a board, place them alongside a mirror or a cupboard where you are exposed to it on a daily basis, and I'm sure by now you know how to ace your financial indicators. I'm sure you know already by now, if I have to mention any one of the indicators, you can tell me exactly this is what the indicator is all about. Now, when dealing with your financial indicators, remember, break them up into the different groups: profitability, returns, liquidity, solvency. You would find that very often, if the examiner says, discuss 3 liquidity ratios, you are expected to know which are your liquidity ratios. Okay? And yes, there are 6 liquidity ratios. I'm sure you know them. Let's mention a few. Your current ratio, your asset test ratio, debtors collection, creditors payment, stock holding period, and turnover rate of stock. That's it, guys. Those are your liquidity ratios. You need to know them. You need to know, 1, how to calculate them. Number 2, once you've calculated, you must also look at the trend, the pattern. What is happening? What happened from last year to this year? Was there an increase or was there a decrease? Talk about that when you are responding. In your responses to this type of question, mention that. Was there an increase or a decrease from last year? Mention the fact that the company could experience liquidity problems. Okay, so sometimes you could also be asked to compare 2 companies. And then you are then comparing the liquidity of one company to the liquidity of another company. So keep that in mind as well. Okay, that's your financial indicators. Now remember, when we're talking about theory, we are talking about internal control, we are talking about ethical decisions. All of that could be incorporated into a question on cash flow as well. So clearly you can see that this section encompasses a lot of other sections of the work, and make sure that you are able to understand the question and know exactly what is required of you. Okay, so going into the question now. The question says, you are provided with information for the financial year ended the 28th of February 2014, taken from the books of RGW Limited, a public company listed on the Johannesburg Securities Exchange. Refer to the fixed asset note and information D to prepare the asset disposal account on the 28th of February. Okay, so let's look at my information. What am I given? I'm given an extract from my balance sheet, right? And I'm given an incomplete fixed asset note. Okay? That's the information that I'm given. What am I expected to do? I am expected to complete this note as well as prepare the asset disposal account. Okay, now, looking at my land and buildings, I can clearly see that that portion of the note is complete as it appears there, right? I need to fill in information into my vehicles and my equipment. So those are the 2 that I need to complete. Right, and I need to complete my asset disposal account. Now, when it comes to asset disposal, remember, what's very important is when you are dealing with asset disposal is to draw a table. What is the table all about? Here goes. Depreciation, cost price, accumulated depreciation, carrying value, and selling price. Now, what do we know? In this particular question, we know that the carrying value is going to be equal to the selling price. Now, let us get information regarding the disposal of this particular asset. Let's see what we have here. We are told that an old printer that was bought on the 1st of June 2011 for, no price is given to us, question mark, was sold for cash on the 31st of August 2013 at carrying value, remember what I said, no profit or loss, and in its place a new printer of 100,000 Rand was bought on the 1st of September 2013. Right, what else do we know? We know that depreciation on equipment is written off at 20% per annum on the diminishing balance method. So we've got our information on the equipment. So now, guys, before we get into the question, we've reached the end of this segment. take a mini break, refresh, and make sure you come back ready for that asset disposal.
All right, mindsetters, before we go to a break, don't forget the Get Connected competition has officially closed, and we want you to keep glued to your screens because at 10 to 6, we are announcing the winner of the Sony Xperia L. And remember, from 6 up until 7, we'll be announcing winners for the airtime vouchers. So if you got connected and you entered the competition and you shared it with all your friends, make sure you stay tuned and you watch your tellies very closely because you might win yourself airtime vouchers or a Sony Xperia L. So with that said, let's take a very quick break and we'll see you straight after this. Welcome back, Mindsetters, from that break. So if you guys have your learner's licenses and you want to win yourself a cool Chevy Spark L, you better listen up. We want you guys to be a bright spark by downloading the official Safeways K53 Learners and Drivers app from the Google Play Store. So if you have a Samsung smartphone, you can download the app, or you can buy the official Safeways K53 Learners and Drivers Manual, available through major South African retailers, and then you keep your receipt so that we have proof that you bought it or you downloaded the app. And then once you've done that, you go to our Learn Extra page. There is a competition tab right there. You click on that tab, you fill in all your information, and then you share the competition tab with all your friends to stand a chance to get an extra entry for you guys to win the Chevy Spark. Okay, and then once you've done that, you like our Facebook page, and then you like this official Safeways K53 Learners and Drivers Manual Facebook page as well, so that you guys can stand a chance to win a Chevy Spark L. And remember, the very first winner of the Chevy Spark will be announced exactly a month from now. So on the 23rd of November, there will be a live show where we will announce the winner of the Chevy Spark L. So if you want to be a bright spark and win yourself a great car, make sure you enter the competition. And remember, all the details for the competition are on our Facebook page, so you have no excuse but to enter this awesome competition. Ashraf.
Oh, well done.
Yes.
Okay, did you enter? We can't enter.
No, I can't enter.
Okay, never mind.
But I've driven the car.
Yes. Okay. Right, guys, back to our equipment story. Remember what we said? We are dealing with the disposal of an asset, and therefore, when dealing with the disposal of an asset, what's critical is for you to draw up this table here. So whenever you're doing an asset disposal, start off by doing this here. Firstly, let's determine the cost price of this equipment that we are selling. Now watch this very carefully. You've got an opening balance of 800,000, right? You've purchased further equipment to the value of 100,000, okay? And your closing balance is 810,000. Clearly you can see that 800 plus 100 is 900,000, and 900,000 and the closing balance is now 810,000, tells you that you have disposed of equipment to the value of 90,000 Rand. Once again, 800 plus 100 minus 810. Okay? If you are unsure, by all means, redraft the T account, and you will see that the cost price of the asset, of the equipment that we disposed of, was 90,000 Rand. Okay, so therefore, in my asset disposal account, immediately I say, before I come to my asset disposal, 90,000 Rand was the cost price of the asset, or I keep on saying vehicle, was the cost price of the equipment that I have disposed of. Right, what else do I know about this equipment? I know that the old printer was bought on the 1st of June 2011. Important information. 1st of June 2011. So 1/6/2011, and the end of that year was the 28th of February 2012. Can you see that? Important. We're trying to ascertain something here. We're trying to calculate something of importance. Secondly, the next financial year would have started on the 1st of March 2012 and ended the 28th of February 2013. Okay? Can you see that? Right? And then, remember, we are now working for what? We are now working for this financial year, which is what? The 1st of March 2013, ending the 28th of February 2014. Right, so clearly you can see, what have I done? I've gone back to, in order to calculate what was the accumulated depreciation on this equipment, right? And what do we know about it? We know that the depreciation is written off at 20% per annum on the diminishing balance method. Therefore, let's look at my calculations now. In the first calculation, it's very simple. It's 90,000 over 1 times 20 over 100 times my time. That means, for how many months did I use this particular piece of equipment? June, July, August, September, October, November, December, January, February. Does it give me 9 months? Certainly it does. From June till the end of February. 9 months times 9 over 12. Right, let's do that calculation. So we got 90,000 times 20% divide by 12 times 9 is equal to 13,500. Okay, so immediately I say fine. For that period, my depreciation amounted to 13,500. Okay? Then, what do I now do? I say fine. Let's go to the next period. In the next period, I had the equipment for the entire financial year. So, I can't use 90,000, reason being because I'm using diminishing balance method. Therefore, I say 90,000, coming back to my calculator, I say 90,000 minus 13,500 will give me a figure of 76,500. So therefore, 76,500 times 20 over 100 times 12 over 12. Okay, so therefore 76,500 times 20% is equal to 15,300. 12 over 12, you know, remains 1. So there's no need to work out the monthly, that one, because it's for the entire year. 15,300. Okay, so let's start that one in 15,300. So immediately you can see that 28,000, that's 15 plus 15,3 plus 13,5 will give you 28,800. That's 15,300 plus 13,500 will give you a figure of 28,800. Right, what is the 28,800? Coming back to my table, can you see 28,800 would be my accumulated depreciation when at the beginning of this financial period. Okay, what do I now do? I now calculate my depreciation for the current year. That means I now work out the depreciation for this period here, which is on the 1st of March, but the important part now to ascertain, when did we sell this equipment? Okay, and what do we find? That this equipment was sold for cash on the 31st of August 2013. That means in this financial year, I did not use the equipment for the entire year. I sold it on the 31st of August. So in other words, March, April, May, June, July, August, 6 months. Right. Okie dokie, let's go back to our calculation and we say, fine. What do we now do? Now we say, take your cost price, which was 90,000, minus 28,800 to give me a figure of 61,200. There's my 61,200 times 20%, 20 over 100 times 6 over 12, and this should give you 6120. Let's check. So it's 61,200 times 20% divided by 2 for half the year, 6120. There we have the figure, 6120. What is the 6120? The 6120, grade 12s, is your current year's depreciation. Therefore, watch now, 6120, add the two figures together, plus 28,800 will give me a value of 34,920. The carrying value will be 34, sorry, not the carrying value. The total will be, the amount will be 34,920. Let's put it in, 34,920. Okay, let's calculate the carrying value. How do we calculate carrying value? Selling price, we will determine the selling price because it's equal to the carrying value. So we say cost price of 90,000. We got our cost price of 90,000 minus 34,920 to give me a figure of 55,080. 55,080. What have I done? I've got information that I'm going to be using not only for my asset disposal, but also for my cash flow purposes. Right, so what have we done here now? We've calculated the asset disposal, we've taken it in detail, and we've calculated information that we require. Now watch this closely. I've sold this asset for 55,080 Rand cash, right? My current year's depreciation was 6120, so obviously I'm going to use this information to complete the note that I am expected to complete, right? And you're going to find that in my disposals at carrying value, 55,080, okay? And something else that we're going to be doing, we're not going to do this in its entirety. We want to go into the cash flow as well. So we're going to do some important calculations in this particular note and to show you how you get those figures. The rest of the calculations are a piece of cake, simple depreciation entries. So we're only going to focus on those that are challenging so you will know exactly where to slot them in. That was the one. Remember, your other depreciation figure you're going to calculate from the remainder of your equipment. But there's one very interesting one here that we have to calculate. And that is the depreciation on your vehicles. Watch what the question tells you. The question tells you that vehicles, with the exception of the delivery truck bought for 500,000 on the 31st of October 2013, the business has had all other vehicles for 4 years, including this year, and no vehicles were sold during the year. Now look at this question very carefully and notice that you are given the accumulated depreciation on the vehicles, but you are not given the cost price of those vehicles. But you are told that these vehicles were bought 4 years ago, including this year. That means prior to this year, there was 3 years of accumulated depreciation. And your rate of depreciation was equal to 15%. And you are using the cost price in order to calculate your depreciation. Important information. Watch. Watch this here. What are we told? 1, we had all the vehicles for 4 years, including this year. So if we exclude this year, we had the vehicles for 3 years. What else do we know? No vehicles were sold, so there was no selling of vehicles, but we are told that depreciation on vehicles is written off at 15% per annum on the cost price method, and this rate has been maintained over the years since the business came into operation. Right, very, very interesting question, and therefore necessary for you to understand exactly what is going on. Now watch this here. If we wrote off 15% in year one, so in year one, we wrote off 15%. In year two, we wrote off another 15%. And in year three, we wrote off another 15%. In total, we've written off 45% of the vehicles. Do you agree with that? Certainly you should. Why? Because 15% in each year, added for 3 years, gives you a total of 45%. Right, now what do? Now we say, fine, the 45% that we have written off is equal to what? Let's look at what it's equal to. It's equal to 720,000. Therefore, 720,000. What do you want to know? What are you trying to calculate? We are trying to calculate the cost price of those vehicles. And obviously, that would be equal to 100%, which is equal to my unknown. Right, let's solve this here. So all that we do now is we solve for x, and we say that 720,000 times 100 is equal to 45x. Can you see what I'm doing? I'm cross multiplying. Therefore, we say 720,000 times 100 divided by 45 is equal to 1,600,000. Right, so what is that? The 1,600,000 would now be the cost price. Let's erase this here. The 1,600,000 would be the cost price of the vehicles at the beginning of the financial year. Now, very, very important when it comes to calculating your depreciation. Always work with this particular method in mind. What am I referring to? Whenever you're calculating depreciation, keep in mind your three components. Number one, the sold. Number two, your unsold. And number three, the new. So, keep these components separately when you are doing your calculations. And very, very important, when you are working with the old unsold, the two methods of depreciation will tell you how to go about answering the question. In other words, if you are using the cost price method, you use one bracket. And if you are using the diminishing balance method, you use two brackets. What am I referring to? Watch this here. Let us assume we're working with the diminishing balance method. Right. With the diminishing balance method, you open up two brackets. Why? Firstly, you got the cost price and the accumulated depreciation. Okay, so in other words, take the cost price of the equipment at the beginning of the year and the cost price of your equipment at the beginning of the year was 800,000. Therefore, in your bracket, you will have 800,000 minus the 90,000. Can you recall? You sold particular equipment to the value of 90,000 rand. The cost price of it was 90,000 rand. Then look at your accumulated depreciation. Accumulated depreciation was 390,000 rand. So you say 390,000 rand minus 28,800. Why 28,800? Because that was the value of your accumulated depreciation at the beginning of the financial period. Well, guys, almost time for another break. Stay with us. We're going to get into some of the components of the cash flow statement. Back in a jiffy.
All right. Mindset is, although it is the last day of Learn Extra Live, don't forget we still have exam school running for you guys to help you prep for your exams. And remember, accounting, we have it on Monday from 3:30 until 5. That is the live show for accounting. So make sure you check that out to help you guys prep for those final exams. So with that said, let's take a very quick break and we'll see you straight after this. Welcome back, Mindsetters, from that break. Remember, we are doing cash flow statements with Ashraf, but if you guys have any other questions, you can always send them to the help desk. The Learn Extra help desk is in place for you guys to send all your questions so that you are helped and you are prepped up for your final exams. All the information is on our Facebook page for all the help desks that we have in place for you guys to send your questions to. So I won't waste your time. I'll send it straight back to Ashraf.
Thank you. Guys, cash flow statement. What are we working with? The cash generated from operations is a given figure. You don't have to calculate it. However, there may be an occasion where you have to calculate that figure. We've been through that, done and dusted. What are we looking at? Under my operating activities, number one is my interest expense. Okay. Let's go and see, do I have my interest expense? There in my given information, 135,000. So, straightforward, interest expense, 135,000 Rand. Remember, outflow of funds, and therefore in brackets. Okay, now we come to our dividends paid. Now, when calculating your dividends paid, what are you looking for? You are looking for the actual amount of money that had left the business as a result of dividends that were paid to shareholders. Let's look at our information. Now watch this very carefully here. Shareholders for dividends, right? And if you recall from our previous shows, what did we say? You always look at last year's final dividend plus this year's interim. Remember the shortcut? Let's take the shortcut because we have the information. What is it? Last year's final, which was 240,000. And when I say last year, please remember to draw your love arrow. Last year, this year. So you know exactly when you are doing your comparison, which one comes where. Right. So what was last year's final dividend? Last year's final dividend was 240,000. Therefore, in my dividends, open it up, 240,000. Last year's final. What was this year's interim? Let's see if we have information regarding the dividend. We should have an interim dividend of 22 cents per share was declared and paid during the year. Right. So, what else do we know? We know that all shares qualified for the interim dividend, all shares meaning 1 million shares which were in issue at the beginning of the year, plus the 500,000 that we sold during the year. Can you see it? 500,000 shares were issued during the year. So in total, we had 1,500,000 shares. Okie dokie. So therefore, we say 1,500,000 times, 22, that's 22 cents, to give me a figure of 330,000. Okay, so I've got that figure plus 330,000. Voila, I've got my dividends paid figure. Got it? Okay. Now, I need to find out my taxation paid. Okay? And to calculate my taxation paid, we go back to our information and we see, we look for SARS income tax. What type of an account is SARS income tax? The answer is, it depends. It depends on what? It depends on the balance that is given to you. So be careful with SARS income tax. And here's a classic example for you. Watch. SARS income tax last year has a 0. But if I go back and I see, let's go up here. There's another SARS income tax. Last year, a debit balance of 14,200. Can you see? So therefore, that answers my question. What type of an account is SARS income tax? The answer, grade 12s, is it depends on the balance. Last year, 14,200 appeared under assets. So it was a debtor. SARS was owing us the money, right? And this year, my SARS income tax, here goes, is a credit of 25,700, meaning we are owing SARS that amount of money. Okay, so therefore, if we look at this here, there's my SARS income tax account. Step number 1, my opening balance was a debit balance of 14,200. So a debit balance of 14,200. My closing balance was what was my closing balance for SARS? Let's find it here. SARS income tax closing balance 25,700, where under liabilities, so a credit balance of 25,700. Remember, 25,700 is my balance going to be a credit balance for next year. What else do I need? What was the value of my income tax that was paid? Go back to my question, and you see income tax 352,800. Therefore, here we got 352,800. Okay, so now, basically, what are we going to do now? We're going to take our 352,800 minus the 14,200 minus the 25,700, and that's going to give us the value of our taxation paid. Guys, before we've got something important to do, but before we get there, let me just give you just a quick roundup of this cash flow statement so you know. Under investing, you're going to look at tangible assets purchased, proceeds of my disposal, and my investments. And then under my financing, you can see proceeds of shares issued and my loan. So keep that in mind. Remember, you've got this question by you. Work through it and make sure you understand it. Now, I'm sure you're looking forward to Monday's lesson. Monday's lesson, we're going to take various questions from our viewers. Important questions. So guys, the place to be on Monday is with us because Tuesday is D-Day.
Yes,
But
yes.
we've got something happening here in studio right now.
I'll come to you,
Okie
Ashraf.
dokie.
Yes. Oui. Okay. No, let's just move there.
Okay. Let's
So
see.
that
Let's
they can
see.
see
Let's
us.
see what's happening,
Okay.
guys.
So we're doing the draw for the Get Connected competition for the very last Sony Xperia R. We're giving away to a lucky mindset at home. So I'll just
Shake.
shake this. So many names in here, Ashraf. Let's pick one.
Must I
very
choose one?
Yes, one.
Okay, I'm going to close my eyes. And I'm going to choose the one. And the winner is...
Macau Masala. You
Well
have won yourself a
done.
Sony Xperia R. Yay!
Well done. So now, remember, you're going to use the Sony Xperia
Yes.
to phone everybody on the 6th of January to say, I have got an A in accounting.
Yes, and you're gonna search for all the mindset
I'm
questions
telling
and
you,
everything.
I'm telling
Makao
you.
Masala, congratulations to you. You have won a Sony Xperia L. Do you want to just do a few
Yes.
more questions?
Yes,
Okay.
certainly. Let's
All
do
right.
that. Okay, guys, so we've got our winner. Coming back to what we were busy with here, right? We said under investing, we're going to look at the tangible assets that we purchased. Now, this information appears for us. Where does it appear? Remember here, you can see it. Watch here. Additions, you bought land and buildings, you bought vehicles, and you bought equipment. So all that you do now is you add the three components together. You add your land and buildings, which is 1,315,000, 1,315,000, plus you add the 500,000, plus you add the 100,000, okay? And that will give you the value of the tangible assets that you purchased, 1,915,000. So therefore, watch this here. 1,915,000. But please, please, please make sure that you show your calculations in brackets. Now, do you recall we had a proceed of a vehicle that we sold? You recall the proceed? Yes, if memory serves me correct, it was 55080, but let's check what that figure was. Remember, we calculated it. There goes. 55080 was the disposal at carrying value. Therefore, you're going to slot that in here as well. So this would be a negative. 55080 would be a positive, and that would be my proceed. Guys, we have worked very hard for you. We are sure that you are definitely going to get the best results in accounting. How do we end off? Aim for the moon, because if you don't get there, you're going to be an accounting shining star. Until Monday, be good.
Thank you so much, Ashraf, for the lesson. Mindsetters, thank you for tuning in. Ashraf said it all. We're wishing you everything of the best for your final exams. Don't forget to tune in Monday, exam school, for all your accountants out there, so that you guys are nicely prepped for your final exams. We love you very much, guys. Goodbye from us.